Well, Zoom had a significant update. Took me a moment to figure out where everything was at. You got to give it to them, though. They are constantly trying to find new ways to make that thing better. And as much as I hate Zoom, I got to say also that I've tried the other places and I hate them more. All right, I think that does it. Good morning, everybody. There was a lot of talk about the disconnect between the NVIDIA move yesterday and the rest of the market. Sure, the market went down a little bit, but nothing compared to what NVIDIA moved. And if you read the founder's notes on Spot Gamma, the AM edition, they kind of went over that a little bit. It's insightful to say the least. There appears to be a downside disconnect that might help the market out if NVIDIA does continue to move down, which they're calling into question anyways. Think about how much it's moved, 200% in 2 years. I'm sure my numbers are off a little bit, but not by much. And it pulled back since its top, what, 50%? I guess that'd be 25% of the entire 200% move. It had to pull back at some point. All right, Europe going in the other direction today compared to how we saw it yesterday. Small caps basically flat with the Dow. S&P up a quarter, NASDAQ up nearly 2 quarters. It's getting there. Keep pushing. It's more Fed talk today. We're going to see some auctions in the front end, like the 2-year. So, worth keeping an eye on that. So far, we haven't really seen too much out of the Fed talks. And, to be fair, we're really not expecting very much out of those talks. The main thing is you still have to pay attention to when they're talking and who's talking, where they're talking. Sometimes it doesn't matter. They'll be, like at some Boy Scouts of America luncheon or something like that. They're not going to say anything there. Or it'll be a pre-recorded message with no Q&A. Very unlikely that the pre-recorded message has some oops in it. And the oops is what you have to watch for. If it's a live event and there's going to be Q&A, there's always the possibility that they say something they didn't mean to say, or they say it in a way that's misconstrued by the reporters and it gets reported that way. The algos will respond to it immediately. It won't matter if it gets retracted 5 minutes later, the move will have already happened. So there's always that threat if you're day trading to just know who's speaking, where they're speaking. It take a little time to click the button, dig a little deeper and see, is it pre-recorded or not? Is it at a place that may or may not have any impact? And then if it's live or not. I say it all the time, watch the clock. It's one of the best indicators you can get. and it's free. I thought we already got the bank stress info from over the weekend. They didn't do too good. I'm surprised to see it here now. But it's tomorrow anyways. We'll dig a little deeper into that, find out what's up. Tomorrow also the 5-year auction, but again, that's tomorrow, so we don't need to worry about it today. Bowman was chipping teeth this morning. He didn't really say anything that we didn't already know. And NVIDIA is up a bit again this morning, but that could just be, a dead cat bounce more than anything else. Say year-to-date VWAP has just been a fantastic champ on NVIDIA here. So it's on the move to the upside. I would say check the half back of yesterday and then the half back of the entire red days. I wouldn't add that green day to it. That half back right there, so 129, and this half back here at 121.83. Something like that. If NVIDIA can get through 121.83, then it can challenge 127.25. Then it has that half back at 129. In relation to the ADRs, we really don't have any edge this morning one way or the other. We're slightly closer to the upper ADR, but not by very much. The market really hasn't moved anywhere. So generally we would be looking for, which side are we closer to? We're building a little bit of a megaphone pattern. You can try to snap lines on it, but really the lines aren't going to do you any good. It's just more of a visual representation than anything else, right? Megaphone pattern. You'd want to see it expanding in both directions, although it can be a flat bottom or a flat top with one side expanding versus the other. It's showing an expansion. The idea behind this is that sooner or later it'll break, and that even though it is expanding, it's still maintaining a range. That's what we need to see break. That doesn't really give us any edge on which of the ADRs we're going to go to. We're closer to the upper one, but only by a marginal amount. We were inside day breakout and managed to pull it back in again, and not by very much. That's another one worth keeping your eye on. This is yesterday's trading range. I take that back. Catch that low there. We tested the inside day breakout, didn't get it. So that would be the flat bottom. And it's what we want to watch for an expansion. If we can break yesterday's low, then we can get a nice move down into the lower ADR. The upper ADR being inside of yesterday's range makes it more likely we're going to hit the upper ADR first before we hit the lower one, especially after we've tested the low side and we weren't able to break through yesterday's lows. The SPY gamma index this morning was almost to 0. The way that thing works is it reads from a -4 all the way up to 4. Obviously 0 being in the middle. When it's -4, the market can make really big moves. And when it's +4, the market really just kind of chops sideways. On Friday, it was really close to 4. It was like 3.86 something. I mean, that's really close to 4. Look at it this morning, it's at 0. Now, that's not the most negative it could be. It could be -4, and we could be looking at one of those days where we really move based nothing solely on that. We're at 0. We have the potential to move, but we're probably going to need more than that. We can't just base all of it on that. -4, we could put it on gamma and see it move. So we need a catalyst. We need a movement, something to light the fuse, so to speak. Well, really look at what's on the table today. We didn't really have anything that could light that fuse. Some numbers out of Canada. Red Book really isn't going to do it. Tomorrow we have better catalysts, I guess is a way to look at it, but not today. All right, so what we're looking at here is 2 different pivot points. We have the weekly pivot up here at 55.38. We're underneath that weekly pivot. And then we have the daily pivot, that floor pivot, 55.23. It's a wide channel. Wide channels generally imply that we won't expand, that we'll maintain ranges. These pivots don't move price. They're just giving us a read on what we think price will do today. Generally, when we have a narrow channel, price is more likely to expand. And when we have a wide channel, price is more likely to sit tight and really not expand all that much. Having said that, we've gone sideways now for a while. Sure, it's been a slow grind to the downside, but for the most part, we're just kind of chopping about, right? Let's put an R line on here. Since last Thursday, I think that speaks for itself. We're slowly grinding down to that 5,500 in the SPX. But we're really doing a lot of ranging. Look at how Friday and Monday are just overlapping. Little peak to the upside, small expansion at the end of the day to the downside. The market won't stay complacent like this forever. It won't just hold this slow grind. So we want to look for the catalyst that's going to bring us out of this, anticipate which one it's going to be that actually causes the move, and then plan out the levels for where we think price is going to go if we get that move. It might sound a bit complex, but really it's not, right? There's only so many things the market can do. We can plan for both, plan for all 3. It can go up, it can go down, it can go sideways. So you make the plans, you get the catalyst, whichever way it goes, you already know what you're supposed to do with it. What we were looking at is the floor pivots with the ADR lines. Now we're looking at the floor pivots with the SNR lines. So floor pivots have a math formula that will auto calculate resistance levels and support levels. R1s are in red, S1s are in green. I had to change the colors. Apparently, default, the S levels would be in red and the R levels would be in green, but that drove me crazy, so I swapped it. I mentioned yesterday that we very likely could just stay in the range. Oddly enough, that's what we did most of the day yesterday. We peaked out just a little bit above early in the session, and we broke out right at the very end of the session but otherwise we stayed between the R1 and the S1 level. So far today, nothing's changed. It's the same point of view. We really don't have a catalyst. We really don't have the fire to move anywhere. And we're range bound in between the ADR lines, waiting on data. And I really think that the market, as we get into the later part of today, will be focused on what we're going to get tomorrow, and we'll just go sideways into it as if we're not already going sideways enough. We are underneath the floor pivot, a little bit like reciprocation. We could get the same thing on the other side. So just measure the entire Globex range and plot it to the upside. Really, it gets you into R1. The call wall hasn't rolled. And if you read the founder's notes from Spot Gamma, they said that's one of the things they're watching for right now. They will consider that a bullish bias if or when the call wall rolls up. If it rolls down, it will be considered a bearish behavior. We're really close to the 10-day and the 3-week. We're back to the volatility trigger. It's what we hit yesterday. It's what we hit in the overnight hours. The 20-day moving average is laying on top of the lower ADR line, double level of support. The 3-week is laying on top of the lower ADR red line. So a 3-week moving average, that is potential support. 20-day moving average, also potential support. Volatility trigger is also support, and so is the 10-day moving average. There's a lot of structure right underneath this is basically the point. Now, that doesn't mean that we can't break it, because price can do whatever it wants. But it's going to take some fire to break it. We would need a really good catalyst. We don't have one on deck. The thing is, surprises move the markets more than anything else. So that big catalyst that we're looking for very likely won't be any of the bricks in the wall of worry that we already know about. It's usually the ones that the market didn't know and wasn't anticipating that really moves the market. $55.25 is what we're fighting right now. What we're trying to get back above. That's the problem. That's the issue that we've got to deal with. It's the half back here from this really big day. And even if we do manage to get through it, 55.38 is the other level, which is the entire move here. Or we can do it the other way if this holds. It's 55.50 half back level. And I kind of like that one better. So 55.25 and 55.50. Those are the two half back levels of concern. Yeah, to be fair, there is a lot of resistance overhead too. I was pointing out all that support as just a lot of structure underneath this that could stop us from falling lower, not even getting into the things that Spot Gamma had covered. But yeah, there is a lot of stuff overhead too. Which is why we continue to go sideways looking for a catalyst. All right, we're going to continue to lose this volume from the lower level. We did see the point of control move up yesterday. Remember, it was lower down. Now it's over our head. That's another resistance. The high volume node down here around that 5,500 and 5511 cog line very likely can act as a magnet or support, that if we break this low of yesterday, then we're probably going to run it right through it and get to 5492 cog line. It's really close to this yellow line here, which is the value area low. This is the value area high. This is the point of control. That 5487, just above that, 5492 cog line. So it's, it's the lower end of this high volume shelf. If we break that, 5,300 easy, right? Air pocket of risk, straight shot down. Well, that's a really big assumption. How long could it be until NVIDIA drops, assuming you're assuming that NVIDIA is actually going to drop, that insiders start selling, and that it goes to 95 and pulls the NQ with it? That's a whole lot of assumption that you've packed into that question. It could be forever because price can do whatever it wants. NVIDIA doesn't ever have to fall to 95 or fall any farther than it already has. And looking at spot gamma and their correlation metrics that they just pointed out this morning, they don't have to pull the NQ with it at all. NVIDIA really fell yesterday and the NASDAQ only went down 1%. The market is disconnecting itself from NVIDIA on the downside. So even if NVIDIA does crash and burn, it doesn't look like it's going to take the markets with it. And from what we can tell, NVIDIA is just profit taking at the moment. There's their profit margins, their forward guidance, their company, their business, their product continues to just improve. The numbers are getting bigger and bigger and bigger and better and better and better. Why would they go down? Other than the fact that they're a little overextended, and so they're going to get some profit taking. Got a VPOC from yesterday. This is like the first one since the contract change. We might actually differentiate this, keep them separate. The one that I have left here, I believe, was in the gray zone when we were really focused on getting the contracts swapped over. So it's possible that this one has contracts in it, right? These new contracts in it. Why does that not look right? Think or swim, I'll tell you. That thing was right the first time. So two VPOC levels. $55.32 is a cog line that's close, very close to where this point of control is. Liquidity resides on the other side of the pivot. So if we get to 55.30, I would expect to overshoot into the cog line. We didn't get there yet. It's over our head, worth focusing on. And then we've got the ADR levels. So really what we're looking at this point is just another pullback. It's the same kind of pullback that we had back here. It's only that so far, nothing more than that. We are getting into this. Let's just kind of zoom in here a little bit. Right before the contract change, when we went through this, and then we had this very large breakout, consider this a liquidity gap. So it's a gap. Just get rid of the word liquidity. It confuses people. Consider this a gap. The gap is getting filled. When we get back down to this point, will the fade be done? Just like when we close the gap and then resume our normal activities, or are we going to break this structure and get lower than this? That's 55.11 on the top of the box here. It's the cog line. And then 54.70 on the downside. Really not a number on that one. So we got 92 as a cog line, and that would be higher, right? Really, it's closer to like the starting point of that move. Either way, the question remains if we're going to break under this box and actually expand to the downside, or if we're just going to close this gap, get a TRB, which is a trend line breakover, kind of breaking over the top of that line, and we just resume our move to the upside. So this fade that we're seeing is just a pullback at this point, like a liquidity gap getting closed. All right, this is the range for the week. 5,600 down to 54.71. This range is based on volatility metrics. We should close inside of this box 70% of the time if we're using one standard deviation math. The S&P has a very accurate expected move, so it tends to close in the box 80% of the time. It's 8 out of 10. We don't have a good track record right now. It's been closing outside the box on Friday way more than it should. And that doesn't mean that the indicator isn't working. It's doing its job perfectly. It's telling us the market is volatile. Sure, you're not seeing it in the VIX, but there's so many different ways to look at volatility. And the VIX is the poorest, most generic way to look at VIX, look at volatility. The market is volatile, it's making big moves, and it's closing outside of its expected ranges more than it should. We can use that a number of ways. One, don't put on iron condors on a week-to-week basis. Two, don't try to use those pinning tactic plays where we would build butterflies and stack them on these levels, because we're not hitting those. We're not closing on those levels. We're exceeding them. So far on the week, we're still within the box. We haven't done anything, and that's okay because that's how far we were supposed to move for the entire week. Take last week for an example, where on Monday we were at the edge of the box at the end of the first day. That was how far we were supposed to move for the entire week, and we made it in one day. So far this week, we haven't done anything, which is what the call was yesterday, right? We're going to go sideways until we get data on Wednesday. So far, that's playing out. We did get back to the 10, and we're starting to move away from it again. We didn't necessarily hit it and cross through it like we did at all these previous spots, but you can see how we're starting to turn the corner here. Now, there's been examples before where we get an up day and then we still cross through anyways, right? Like back here, we started to rise and we dropped right back down again. So this is just a model of what we have been doing. Technical analysis 101, right? Look at the past, try to figure out when it's going to repeat. So we're holding above the 10. We're back to the 10. We're starting to move away from the 10. We want to see that structure hold. That's the 10-day, by the way. Flip it over, take a look at the weekly. We're sitting at 3%. Now, I use this indicator a lot of ways, but the main one that I generally use it for, what I find it's most valuable for, is answering the question when we make really fast, really big moves, are we due for a mean reversion and a pullback? Have we moved too far, too fast, and are we going to mean revert? Well, we haven't moved at all. So kind of puts this indicator on the shelf. So it really, we don't need it until we make a move. But we can still take a look at it and just kind of gauge where we're at. On the weekly, we're around 3% from the 10-week. That's the sweet spot. That's kind of where we want to be. If we look back, staying at around that 3% area is just a good, healthy distance from the 10-week moving average. Changes over the last 5 days. Tech is now down more than 2%, 2.25%. Consumer discretionary is up more than 1.75%. And staples up more than 1.25%. Industrials, I mean, things are looking really good, right? Even finance up more than 2.25%. Building materials trying to shake things loose. So things are looking pretty good. All the 50s are above the 200 in every one of these, although it really looks like it wants to cross on energy over here. So we got the 50 above everything. That's a healthy backdrop for the market. Price underneath the 50 on some of these, and a little overextended on the 50 perhaps on some of these. Energy looks a little weak, testing that 200, but really that's the worst one. Maybe building materials. Oh, I broke Thinkorswim. There it goes. Beginning to think I'm asking too much out of it. Bitcoin is up this morning 3%. Semiconductors right behind that at 2.5%. The Mag 7 behind that at 1.25%. And then SMH, so semis again at 1%. We got a lot of semis, a lot of tech, and the Mag 7. I mean, that's a wrap. That right there, just those three is enough to propel us into a trend day. But we've got all this trash below us and all this trash above us. We're going to need more than just those being up, especially with that disconnect that we saw yesterday where NVIDIA really fell and the NASDAQ didn't. If it is disconnecting, then this is going to, that we would just set semis aside and say, well, we got the Mag 7 and Bitcoin. You don't want to rally on Bitcoin. It's nice if you have Bitcoin in there with everything else that's moving, but you don't want the rally to be just Bitcoin. Things that are down, nat gas, the China ADRs, China again through MSCI, but it's not down enough. We need it down more. Solar, agriculture, nat gas, pot stocks, crude, China ADRs, pot stocks again. Those are all down this morning. Let's take a look at some of these Bitcoin proxies. That's like a reflexive bounce. All right, MSTR, that's a biggie. So far, it's still inside day. It is up, but not enough. And put that out on to a daily. We got to get outside of this really big bar. Coin, another one inside day, same really big bar. If we did get an inside bar breakout, I would look to close the gap to 25.5. Riot's another one. Oh man, look at the dark pool print on this thing. So a really big bar. Just focus on the body of it. The rest of it is that dark pool print. Focus on, say, getting above 950, and I would aim for 1050. That's near the top of this dark pool print. Mara is another one. It's actually looking better than its peers. It's already at the high of yesterday. It just needs to make the breakout. And it has closed the gap from Friday. So that's cool. The risk on Mara is this halfback, Friday's halfback. So 1950 be an area of concern. Yeah, TSM is still stuck halfway through yesterday. It's got to at least get out of that. Get above it, keep it. Then we could worry about, yesterday's high and more than that. But this looks like a, dead cat bounce at this point. I'm not giving these a lot of trust. Square, same thing. Needs to get outside of yesterday's range. Look at all this selling. I would be very careful. Anything above 66. We don't know if they're done yet, right? And to be fair, there's been a lot of buying around 62. So, this could just be an area where we're going to do a lot of chopping and digesting. If we were to measure this out to see if it was a double bottom is supposed to be a bear trap. If this was a trap, it was poorly executed. We went down into this and just chopped about sideways before finally starting to move up. That wouldn't have been a very constructive play. AMD, very sideways for 3 days now, still stuck inside this really big bar. I'd look to see if it breaks that halfback to the downside. You can see we got underneath there, and then they just keep buying it back up. We closed above it yesterday. Watch it in the pre-market, see if we break this. How many times we're going to break it before they just give up, right? And then down we go. Still got to say there was a lot of defense back here. They were willing to step in and buy it. Then it had a catalyst. It really sent it down. They took it right back up again. So it's a really choppy, dangerous product. And yeah, we're underneath the blue line. That's the year-to-date anchor to VWAP. You don't want to be underneath that line. That's bearish. Even the inverse head and shoulders already played out with the measured move. We just don't have anything here. other than lower highs and, well, a higher low at this point. So the Bitcoin proxies, they're up, but most of them didn't look really very good, stuck inside their own range. Try this one. So semis are up. Take a look at chips. NVIDIA up the most. MU's got earnings this week, so approach that one with caution. TSM can't even get out of its own way. Now, SMH, it's trying on that halfback. If it can get above 260, then it has a chance to get into that 265. It's yesterday's high. But above that, you got 269.5. That's the halfback for this whole move. That's going to be a major level of resistance. Still, if you can get an inside day breakout through the halfback, it's not an inside day breakout. I guess it's just the halfback. Get through the halfback and challenge that 265. It's yesterday's high. I wouldn't play any of these. They don't look good. But I get it. If you want something to play, you'll play them. But I don't like any of them. I think you could do better just waiting closer to the open. Let's see what's RGS. All right, well, look at that. Regis Corporation above its year-to-date VWAP. Big move this morning. VLCN. Wave Life Sciences is another one making a big move. Apple's waking up a little bit. Abby just got news. It hit the wire. Doesn't look like the market's responding to it yet. So the Bitcoin proxies, they're not looking very good. They're all inside day, and a lot of them are stuck below their half point. Semiconductors, the same thing. Looks more like a dead cat bounce than anything else. Tech is up, but that's really generic. So it doesn't really get us very far. And really, it looks a lot like semiconductors, right? It's underneath this really big bar, and it's got the halfway point of yesterday. It's going to be the center of attention. Got to get through that before you can do anything else. So those are the top three things, and none of those look good. They're all bound up by a lot of trash overhead. If this is going to be a day where we see the S&P and the NASDAQ rally, then we got to see all three of these things get above yesterday's high and really start to expand to the upside. To be fair, we don't need Bitcoin for that. We could do it on just generic tech and semiconductors, but you got to at least have those two. Mag 7 group. Let's see what we find. There we go. So we got a continuation in Tesla. Still inside days, stuck in the midpoint. That's a small TRB and it failed miserably. Apple's up $1.50. Same with Microsoft, but that doesn't get it outside of this range that it's been in. Microsoft's got this really tight range, almost an IX10 of note. I mean, it's IX10 from this big green candle, but that's not of note. It's too big of a bar. IX10 inside of this one, other than the tail down here where we broke out of it, some people really won't count an IX10 if it's got wicks on either side. The longer we stay in that very tight compressed range, the bigger the move will be when we finally get out of it. Kind of like Baidu down here with this very small range, this spinner bar here. Now, every time we wick out of it, we relieve some of that pressure. And on that wick out, it just failed on the half back and came back in again. Same thing with Baba with this really tight range. We keep wicking out of it on each side, letting off some steam. But those tight ranges, they can turn into really big moves fast, which is why they're worth focusing on. Just got to get the breakout play with it. The Mag 7 is all up this morning for the most part. NVIDIA closed at 118. It's at 121. Even Netflix is up. All right, well, Facebook's flat compared to its peers, but all sideways. Everything is stuck within its own range, within yesterday's range. So that's going to be the catalyst you want to focus on this morning. I wouldn't even look for the rising tide to lift all boats. I would just look for these two groups, the Mag 7 and semis. Get above their halfway point, get that inside day breakout. Then you could see the indexes make a move today. But the question keeps coming back. Why would we make a big move today? The big data point is tomorrow, not today. And I still think we're going to go sideways like yesterday. All right. The 10-year really just fell out. It's below yesterday's low, almost 100%. It's not quite lower than last week's low, but it's close. So we're looking at an inside week breakout on the 10-year to the downside. Should see a little love on that on the ES to the upside. We could retest yesterday's high, 50. Let's just call it 55.50. Unless you like a lot of fives, then it's 55.55. The only downside to that, call out would be the dollar, but it's hitting its head on the 3-week. So let's see that rejection hold, maybe fade back and retest this 10-day moving average. We don't want the dollar rising. We want it staying sideways or falling. Although, you know, it fell yesterday and that really didn't help the NASDAQ and the ES any. So let's just see it not move. All right. So now that we got the 10-year making moves like that, it's worth keeping an eye on. And approach with caution. Things aren't moving exactly the way they should be. Makes me nervous when things don't do what they're supposed to do. And wait for data. It's tomorrow. Watch the clock. Be careful. Be safe.